In the last 10 days alone, I've spoken with multiple entrepreneurs who lost thousands, sometimes tens of thousands of dollars chasing international bank accounts that were never realistically possible in the first place. People were told, just fly to Hong Kong, you'll open everything with zero deposit. Others were promised, go to Panama for a few days and you'll walk out with a premium bank account. Some were sold so-called accumulation accounts in tiny jurisdictions to park hundreds of thousands of euros with zero explanation of long-term viability. And the result? Wasted time, wasted money, burned application, and in some cases, permanent blacklisting from institutions that could have been viable. So today I want to explain something that almost nobody in this industry tells you. Opening an international bank account is not about filling out a form, and it's definitely not about booking a flight. My name is Matteo Maglia, Partnership Manager at GloboBanks, the banking introduction company for international accounts. And in this video, I'm going to explain why 90% of international bank openings fails and what actually separates serious banking advisory from empty promises. Let's start with the uncomfortable truth. Most people approaching offshore or international banking are not rejected because they are bad clients. They are rejected because they were positioned incorrectly. There's a massive difference. When someone tells you, fly to Hong Kong and you'll open a bank account easily. What they are not telling you is that banks in Hong Kong operate under very strict international risk scoring models. They evaluate nexus to jurisdiction, source of funds, business substance, geographic exposure, industry classification, expected transaction volume, and also correspondent banking risks. You cannot bypass that by showing up in person. Physical presence does not override compliance. The same, for example, applies to Panama or Switzerland. Yes, for example, Panama is a strong financial hub. Yes, it has interesting banking institutions, but walking into the country without a structured pre-approval strategy, without knowing which institution fits your profile, without understanding minimum thresholds and internal risk appetite, it is not a strategy. It's like gambling, and banks are not casinos. Then there's another classic situation. Clients being told they can accumulate large sums, hundreds of thousands or also millions in small jurisdictions without proper regulatory alignment, without understanding deposit structure, without understanding how correspondent banks view the jurisdictions. Again, the problem is not the country, the problem is the promise. International banking in 2026 is a different world compared to like 10 years ago. After global compliance reforms, CIRS expansions, FATF monitoring, correspondent banking consolidations, banks are more selective than ever. Not stricter for fun, stricter because they must protect their licenses. So here is the first major reason 90% of applications fail. There is no pre-screening. People submit applications blindly. They fill out forms without understanding what the bank actually wants to see. They explain that it's structured in a way that might make sense to their accountants, but sounds like a red flag to a compliance officer. And once you submit a weak application, you don't just get rejected. You create a digital footprint. Banks share information. Risk databases exist. Internal notes remain. A rejection is not neutral. It changes your profile. The second reason most applications fail is no direct banking relationships. There is a huge difference between knowing a bank exists and having an introduction agreement with the bank and speaking directly to the relationship manager before your file is submitted. International banking is relationship driven, not website driven. If someone's central strategy is go on the website, click apply, hope for the best, that is not a strategy. That is outsourcing your financial future to a generic portal. At GloboBanks, we operate differently. Before an application is submitted, there is a profile analysis. We evaluate your residency, your citizenship, corporate structure, business model, transaction flows, geographical exposure, long-term banking objective, and many other information. Only after that we determine which institutions are actually viable for you. Not theoretically viable, practically viable. If we say something is possible, it's because we already executed similar structures before, and because we talked to the relationship manager in the banks about your profile. And that's a fundamental difference. We don't sell hope, we sell alignment. And another major reasons application fails is misunderstanding deposit expectations. Some advisors promise zero deposit, some promise low threshold, but they don't explain what happens after opening. Banks today care a lot about relationship quality. Are you bringing meaningful activity? Are you aligned with their target client segment? Are you stable long term? High-level institutions are not desperate for your money. They are selective about your profile. Having 5 or 10 millions does not automatically open doors. Quality of client is better than size of deposit. I have personally seen situations where a client with tens of millions was rejected, while a properly structured client with a fraction of the debt deposit, for example, was approved. Why? Well, because one was positioned correctly and the other, well, wasn't. Now, let's clarify something very important. This video, it's about elevating standards. The international banking space is complex. It requires understanding compliance language, knowing internal bank expectations, navigating correspondence relationship, managing documentation standards, and also handling post-opening communication. And most importantly, it requires honesty. If a jurisdiction does not fit your profile, we say it. Easy. If your structure needs adjustment before approaching a bank, we say it. If your structure needs adjustment before approaching a bank, we say it. If something is not feasible remotely, we say it. Because the cost of false promises is enormous, not just financially, reputationally. Boarding an institution can close doors for years, also in other banks. That's why at GloboBanks we operate under signed introduction official agreements with institutions across multiple jurisdictions. We speak directly with the relationship managers and we understand evolving requirements. We adapt positioning based on real feedback from banks, not just assumptions. And we do it remotely in many cases because the structure is prepared correctly from the beginning. Remote does not mean easy. Remote means structured. And there's another layer people rarely consider: post-opening risk. You know, opening the account is the step one. Maintaining it is the step number 2. If your onboarding narrative doesn't match your real transaction behavior, you risk freezes. If your structure doesn't align with expected flows, you risk reviews. International banking is long-term strategy, not one-time access. So when you see marketing that focuses only on, for example, fast opening, zero deposit, guaranteed approval, you should pause. Banking is never guaranteed, only properly positioned. So what should you do if you're serious about international banking in 2026? First, stop looking for the cheapest promise. Second, stop chasing jurisdictions blindly. Third, start thinking strategically. Ask yourself, where do I actually need banking? What is my, for example, long-term objective? How does my structure appear to a compliance officer? What happens if I'm rejected? Because international banking is not about ego. It's about protection. Protection of capital, protection of access, protection of optionality. If you approach it casually, the system will treat you casually. If you approach it professionally, the doors open very differently. So there is a free assessment link below if you want to clarity, not hype. No pressure, no exaggerated promises, just a structured evaluation of what is realistically possible for your profile. If this video helped you understand the real dynamic behind international bank opening, subscribe. We'll continue breaking down what actually works in global banking and what doesn't. I see you in the next video.